Good morning and welcome to the Seiler Wealth Management video blog. I'm Lee Seiler, CEO of Seiler Wealth Management. Also, the website is stockdr.com. That's stockdoctor.com. It's been the same domain name for 20 years. So anyway, please check out all the information that's on that website. A ton of great resources. So last week, you could have slept for the whole week and the market really went nowhere. In fact, the S&P 500 was exactly flat on the week. The Nasdaq was down fractionally on the week. I'm sorry, the Dow was down fractionally, the Nasdaq was up fractionally. So for all intents and purposes, nothing got accomplished. Just a little bit more churning down there, a little bit more base building for many sectors. Now, the sectors I still believe that did do well, and I believe they'll continue to do well, are the financial stocks. I think that they are pretty fairly valued, and I made a comment last week that I don't think the market's undervalued. I don't think we're significantly overvalued. I think there are segments of the market that are over and undervalued. And I think part of the undervalued segment, like we talked about before, energy, I think that healthcare got beat up a little bit, probably unjustly. They're undervalued. I think financials are undervalued. I've got concerned about utilities. I've got concerns about staples. They've made some moves. And we've seen that by these are dividend paying stocks, that their dividends are no longer as attractive as they used to be, because as prices go up, the dividends come down. Okay, that's investing 101, which we do have a course like that. So what do we see from here? It's going to be slow, I think. It's really just the summer doldrums are going to start. It's not a lot of news coming out right now. Of course, we had the disastrous, which I think is just an anomaly. We had the disastrous Labor Department and the jobs report on Friday when they added 38,000 jobs. Horrible. I mean, way off. It was a big time miss. But a lot of that was Verizon was on strike. So that's 35,000 workers on strike. So, look, are these jobs exactly right? No. They get a couple chances to revise them, and likely they'll be revised upward. You get two more kicks in the can, I guess, on this. So I'm not concerned about one blip. Things happen. Let's see what happens next month. If we see another miss, then we have concerns. But already, the Fed funds futures traders were dropping the chances of a Fed funds rate hike to 0% by July, just because of that one report. I don't believe that the Fed are thinking that we are not raising rates by July. I think they're thinking, you know what, it's probably an anomaly. We're still going to move towards raising rates. We're not sure we're going to, but I bet we're 50-50, and I bet that's where they are. I'd venture to say by July, we'll have another Fed rate hike, but that's okay. Okay, the economy is chugging very slowly. It's a very, very slow economy. And you can see that by when you see the earnings of companies where they may be making more money, but they're not growing organically. Their revenues and sales are down. So what does that mean? Well, they're doing great things in the cost-cutting department. They're cutting costs. That's how they're improving profits. Or they're buying back stock. That's how they improve profits. Look, profitability is paramount. You got to get that first. But if you can't grow organically, you can't get those revenues up, you got to figure out how to do it, because you can only cut costs so much. At some point, you still have to have your staff. You still have to have your equipment. You still have to have facilities. So that's the problem with the stock market. You have to try and put a value on that. Now, look, I like some sectors. I'm sitting on an allocation here looking to buy some drug stocks. I like them a lot. I think they're really showing me some great things, but I want to wait till they pull back a little bit. Johnson & Johnson has made a huge run up to over $114. That was a dog not that long ago. So J&J is looking fantastic. I like those stocks with the big yields in them because they do have nice dividends. Bristol Myers has a great dividend. So, I own some Johnson & Johnson just for disclosure for clients, but we like it a lot. But I'm going to go out and I'm going to buy some drug stocks because I believe that they are the place we need to be defensively, and we're going to play some prevent defense. We're limiting our losses on most everything we own, okay? Just in case things really take a hit. Now, I see a 4 to 7% correction sometime looming. I don't know if it's happening this month, July, August, I have no idea. But there's no need to try and be a hero in this market climate. I don't think so. I mean, every time you get to 2100 on the S&P 500, we get beat down, and we're at right there at 2100. There's a ton of resistance up there, a lot of sellers. So we'll see what happens today. Now, let's talk about my events. We have a Women in Investing event. That is a week from tomorrow. Women and Investing. That will be on June 14th. Then we will have Stock Market Jitters event. That's June 21st. So you can log on to stockdr.com, sign up for the events right then and there, and it reserves you a seat. Very limited, 5-6 people tops, and it's going to be great educational stuff. And I'm also, if you have interest in bringing your teenage kids in, I'm willing to do some investing 101 for teenage kids. So think about it. You say, hey, I have a 15-year-old, 16-year-old in high school. I will do a series of those as well because I think I need it. I talked to my kids, and they definitely need it. So I think that other kids would need it too, especially since their dad's a financial guy. So feel free to say, hey, I'd be open to it. I'm not sure there's a market for it, just doing it this way. I mean, I'm going to start doing my rounds to the high schools when it gets started again because I think they really could use the help and a little bit of a base building, give them an idea of what to do. All right. So check out the website. Some great information. My newsletter will be out today. If you're not on the newsletter, sign up through the website. The website's really, really just terrific and loaded with great information. There's articles and presentations and things like that. So anything you have interest in, there's question boxes. Just ask a question. We'll get right back to you. All right. I can't give away a cruise today. I just actually didn't get my bowl ready. Okay. But I appreciate you sharing it. Please share the video. You guys will get cruises. I'm going to get some t-shirts too, stockdoctor.com t-shirts. So share my video, like my video. You guys have really turned this into a really big thing. A lot of people are viewing it now. So I really appreciate it. And if you want to sit down with appointments with me, this week I'm not available at all. I'm in a compliance meeting all week. So next week I will take appointments on Tuesdays and Thursdays. I will make an exception here and there, but Tuesdays and Thursdays. Anyway, I hope everybody has a great day and a great Monday. I'm Lee Seiler, the Stock Doctor, Seiler Wealth Management. Have a great day.